Hey, what's up, everybody? Another day that we see silver taking a beating. Gold is down as well, but it's not taking the beating that silver is taking today. And why is that? Well, it's the same old story, and we're going to get into that in this video. If you don't mind, please hit that thumbs up button on the video. Let me know your thoughts in the comment section below. But why are the precious metals taking a beating today? Silver is currently down 43 cents, or down a little less than 2% as I'm recording this video, to $22.78. And as I stated, gold is down a little bit as well. Not down a whole heck of a lot, but gold is down a little over 1/4%, or down $5.60 to $1,910.50. But why, oh why, you might be asking, is silver and gold currently down? And not just silver and gold, but the stock market is down as well. As I'm currently recording this video, the Dow is down over 400 points, and that's because of strong jobs data that came out today, and the markets are spooked. In my opinion, the markets shouldn't be spooked, but the markets to this day, really, in my opinion, they don't trust the words that are coming out of Jerome Powell's mouth when he said just a few short weeks ago that interest rates were going to possibly continue to go up further with 2 more increases, or by another 0.5%, possibly 1/4% this month in July, maybe another 1/4% in August. But since we had this strong jobs data today, the markets are starting to sort of realize that there may be a 1/4% increase in the month of July because of the strong jobs data. In this video, I will be referencing a couple of different articles. One is from CNBC and another one is from Kitco News. But first, CNBC. It states private sector jobs increased by 497,000 in June, according to data from payroll processing firm ADP, in the biggest month gain since July 2022. June's increase was more than double the Dow Jones consensus estimate of 220,000 gain, and far better than the downwardly revised 267,000 jobs addition seen in May. One thing to keep in the back of your mind is the FOMC meeting for July is going to be the 25th and the 26th, with the announcement of what Jerome Powell is going to do with the federal fund rate increase, if it's going to be an increase or not. But prior to July 25th and 26th, CPI data will be released on July the 12th, so a couple of weeks prior to when Jerome Powell and the FOMC will be meeting and making that announcement as to what the next plan, what the next move is going to be for the federal fund interest rate. Is it going to be an increase of 25 basis points? Will it be another pause? I believe, given the jobs data today, the markets are starting to really believe that it's going to be an increase. And looking at the Fed Watch tool, it looks like there's a 92.4% chance that the rates will go up by 1/4%. Now, the Fed Watch tool, given that there's still a little more than 20 days away until the FOMC will be meeting, so this may or may not be entirely accurate. It's usually more accurate about 24 hours prior to the announcement. And that brings me to a Kitco News article where it says, Fed's Logan says more rate hikes needed amid unexpected economic growth. Federal Reserve Bank of Dallas President Lori Logan said Thursday that there was a case for a rate raise at the June policy meeting, in comments that affirmed her view that more rate increases will be needed to cool off a still strong economy. And Lori Logan is quoted in saying it would have been entirely appropriate to raise the federal funds target range at the Federal Open Market Committee's June meeting, consistent with data we have seen in recent months and the Fed's dual mandate goals, Logan said. But noting a challenging and uncertain environment, Logan said it can make sense to skip a meeting and move more gradually. And that's exactly what they did in June, where Jerome Powell decided to take a pause in June. And then she's quoted in saying, Logan noted that forecasts released at the June FOMC meeting showed an expectation of more rate increases and said it is important for the FOMC to follow through on the signal we set in June, adding 2/3 of the FOMC participants projected at least 2 more rate increases this year. Let me pause again for a minute, because Jerome Powell said exactly that right after he decided to pause rates in June, or to skip rate increases in June. He said, look forward to possibly 2 more rate increases, or another 50 basis points, possibly 2/4%, 25 basis point rate increases, but yet another 50 basis points sometime this year in the calendar year of 2023. And then Logan goes on to say, the Federal Reserve Bank of Dallas president says, I remain very concerned about whether inflation will return to target in a sustainable and timely way, Logan said, adding the continuing outlook for above target inflation and a stronger than expected labor market calls for more restrictive monetary policy, the policymaker said. Logan's comments come from the text of a speech prepared for delivery before the conference at Columbia University. She is a voting member of the rate-setting Federal Open Market Committee this year. Forecasts from the June's FOMC pointed to the possibility of a 0.5 percentage point more in rate hikes later this year, and the Fed officials like Central Bank Chairman Jerome Powell have noted in recent comments the very real prospect that the tightening campaign is not done. And oh, by the way, he said exactly that in right after the rate pause in June. New York Fed leader John Williams also said it's likely the Fed will have to raise rates again, but he did not say if he favored a rate hike at the July FOMC meeting. In her speech, Logan noted that the economy has shown by the job market and inflation was stronger than expected for the first half of the year, and added, while labor market indicators have eased, the overall pace of rebalancing remains slower than previously expected. Logan also cast doubt on the idea that there's some wave of past policy action waiting to flow through the economy, saying, I'm skeptical about it and the potential for large additional effects from this channel. So will the Federal Reserve Chairman Jerome Powell raise rates once again by 25 basis points this month in July? I don't know, but it seems very likely he will. Before we end this video, let's check them silver and gold spot prices one more time. Silver is currently down 41 cents to $22.79. Gold is currently down $5.10 to $1,911. So both gold and silver is pretty much almost identical to what it was when I started this video. Let me know your thoughts, your opinions in the comment section below. Also, let me know in the comment section below, do you think it will be a 25 basis point rate increase or not? Thanks everybody who took time out of your day to watch this video. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.